Imagine this, on January 1st, 2021, you invested $1,000 into this meme coin called Dogecoin. And then you, out of all the luck in the world, made the perfect trade. You sold Dogecoin at around $0.7, or let's just give or take $0.65 per coin. Of the $1,000 investment, you made an $145,000 profit. Absolutely fantastic trade, congratulations. You have $145,000 in the bank. Let's say you make $75,000 per year, so you can use that money to fund your addictions of trading meme coins. So for the year 2021, you made $225,000, which is fantastic. But guess what? Come April 2022, Uncle Sam is here to collect his share. Since you traded Dogecoin on January of 2021 and sold it around April 2021, that is considered a short-term capital trade, and therefore you are taxed at ordinary income. So you'll have to pay $40,000 in taxes just for the Dogecoin trade alone. From the $145,000 profit, $40,000 has gone to Uncle Sam. It takes about $40,000 away from that $140,000. Making money is difficult. What can we do to try to maximize our gains and keep our gains so we can try to use that amount and invest in other things? Now, you might have heard of this. It's called Roth IRA. A typical Roth IRA allows you to invest in stocks without having to pay any taxes when you trade within the account. But when you're investing in SPDR, SPY, QQQ, your expected return, it's about 7% per year. So what can we do to try to hit those home runs that gives you 10x, 100x, 1000x return at the same time without losing so much of it to Uncle Sam? That's what we talk about SDIRA, self-directed IRA. In SDIRA, you're allowed to make alternative investments with things like real estate, commodities, startups, and even cryptocurrencies. And if you set it up correctly, all the gains within the Roth IRA account are tax-free. So you can use that money to invest in other vehicles without having to give 20 to 40% off to Uncle Sam every single time you make a profit. Now in this video, I'm going to show you a step-by-step guide on how to set up an SDIRA so you can invest in cryptocurrencies that's listed on Coinbase. Let's go. Now the first thing you want to do if you want to set up your SDIRA is to find a custodian platform. I've chosen Alto IRA as my custodian platform because they're very convenient. This is not sponsored content by Alto, but Alto, if you're watching this, feel free to reach out. I'd love to get in touch. I do a sponsored content with you guys. And if you want to save on account creation fee on Alto IRA, feel free to use the link below in my description. You'll get $50 deduction off your annual fee. So the first thing we gotta do is go on to the AltoIRA.com and open an account. Since I already created my account, I'm basically taking screenshots of the account creation process of a demo that I saw. So I can walk you through step by step how to create an SDIRA account and invest in cryptocurrencies. Just have to first identify your identity. Then this is an important step. There are two types of SDIRA that Alto can host. One is a Alto IRA. In that account, you can invest in things like startups or your self-funded deal. So any deals that you can bring on yourself privately. And another one is called Alto CryptoIRA. That one is what allows you to invest in cryptocurrencies. And this is the one we're going to open. During account creation, you have the option to open traditional IRA or Roth IRA. Traditional IRA is that you get tax deduction today. Any gains you made is tax-free, but when you withdraw, you start paying taxes at that moment in time. Roth IRA is the contribution you make into the account are not tax deductible. However, any gains that you made, and if you start withdrawing after you turn 58 and a half as of now, then you can get those gains tax-free. Roth IRA is what I like, and this is the one I'm going to select to open my account. After your account is open, you got to fund your account. You can connect to your bank, do a quick cash deposit, or you can transfer from your other IRA account things like Fidelity, TD Ameritrade. After you created a new account, there are some limitations at the beginning. If it's a new crypto IRA account with Alto, you have to wait 7 business days until you can make your first trade. So open the account as soon as possible and deposit funds as soon as possible, because it takes about 3 to 5 business days until those funds are clear and deposited into your crypto IRA account. The next step is to trade crypto. We're just going to go to the trade crypto tab and purchase any crypto that is listed on Coinbase. So Alto uses Coinbase as their custodian. Therefore, they can buy any cryptocurrencies that are available on Coinbase. One way Alto makes money from Alto CryptoIRA is via transactions. They charge a 1% fee on any transactions that you make within the IRA account. But the way I like to look at it is that if I made a gain of, let's say, $100,000 within my IRA account, I'll rather pay a 1% fee of $1,000 than a 27% fee to the US government, which is $27,000. So the 1% fee applies to transaction when you're buying crypto and when you're selling crypto. In this example, we're buying $100 worth of Bitcoin and the fee is $1. Next, we're going to show you how to sell crypto. There's a market sell and a limit sell. I believe limit sell is the best option to go, because when you do market sell, it'll fill you at a random price, even though within a certain range, it might be less in your favor. That's why we like to set limit sell and limit buy order, so we know at what price we can buy in and at what price we can sell our cryptocurrencies. And that's it. That's how you set up a SDIRA, self-directed IRA, on Alto, so you can purchase cryptocurrencies and start making gains tax-free. Remember to use the link in the description to open your Alto account so you can get $50 in your account. Now that you know how to set up an SDIRA account, here is a video of one of the best entrepreneurs and investors of Silicon Valley and how he used the exact same strategy and turned $1,700 into a $5 billion portfolio tax-free. Check it out.